the bond and stock markets seem to be telling very different stories about the future of the economy and maybe corporate earnings. Which one are you more aligned with?
I think at this stage of the game, I would pay attention to what Kashkari is saying. I actually thought that the reaction to the FOMC comments when they did raise rates was a little overdone. I thought the assumption that we were going to, be backing off in any way on rate hikes, that, okay, perhaps it's not 75 basis points, it becomes 50, but the notion that we're going to trail off and start cutting rates in 2023, early 2023 was just not likely, because look at where inflation is. We still have a very negative real Fed funds rate. And you look at what's happening demographically, lower income families are really suffering. I think the Fed has to stay focused. I don't think that much has changed. I think we're just getting clarifications.
Yeah, but I guess the pace of rate hikes and inflation are going to be very different because they take so much time to work through, right? It's like 9 to 12 months or whatever that time may be from when you raise rates to when it really starts to impact the economy. So I'm assuming we're going to have to stop getting rate increases well before we actually hit inflation targets, no?
Yeah, it's not that. Absolutely right. If you're out there sort of saying, okay, well, we're just going to keep raising rates and, at some point they just connect 100%. This is going to act with a lag. It's going to continue to act with a lag. But it's just too far apart right now for the Fed to consider anything close to cutting rates or even tapering that much. Yes, the consensus now is it's not 75 next time. It's more like 50 or 25. I think we keep watching inflation measures. The other thing that empowers the Fed to keep obviously increasing rates is the fact that the job market still remains strong, right? We still have excess jobs, more jobs in the economy than people looking. So I think the Fed is sort of empowered to continue to do this, notwithstanding the talk of recession. The dovish comments are, yes, we're still paying attention to growth in markets, but inflation is going to be more the focus.
Yeah, and just wonder, unless the Fed can, pump more oil, fix supply chains, or figure out a way to get people back to work, that I'm not sure what exactly they can do. Let's go back to the equity markets, though, Dana, because the stock market's been very strong the last couple of weeks. Yeah. The number of Google searches for "is this a market bottom" has got to be off the charts, but it still feels like a shaky market. What is your view on equities right now?
So I wouldn't call a market bottom, and it's infamously difficult to do that anyway, right? My conjecture to you would be that we're probably not at a market bottom yet. I think we've seen a bit of a relief rally lately based on just tech earnings coming in better maybe than we thought they would. Not great, but better than we thought they would. And this interpretation of the Fed's comments being, a bit dovish, at least up to now. But in terms of how you invest, it doesn't necessarily change how the average person should be approaching markets, right? If you're thinking in terms of the short term, I think you're looking at higher quality companies, lower volatility companies. These are the standard defensive postures. We've seen long only quality underperform a bit, but long short quality is actually performing kind of how we would expect it to. And what that tells you is getting rid of those the lowest quality stocks out of your portfolio has done what you'd expect during the course of this year. The really low quality stocks aren't performing as well. I would say if you're a long-term investor, you might still consider this a buying opportunity as long as you're diversified in higher risk areas like emerging markets and small caps. Don't buy individual companies because in a market downturn, in a recession, they're really more under stress than they would be. But a diversified portfolio buying in now could benefit you greatly in the long run.